Hello and welcome to Ticker Tapes. It's Wednesday, which means it's time for a look at the crypto space. Crypto exchange FTX has had a very public dressing down from the FDIC, or Federal Deposit Insurance Corporation, the body that insures savings deposits at qualifying banks across the nation. The FDIC took exception to a tweet made just over a month ago by FTX executive Brett Harrison. In the tweet, Mr. Harrison seemed to imply that FTX and its customer funds were insured by the FDIC, something the FDIC subsequently pointed out was at best incorrect and at worst, completely misleading. The federal body effectively forced FTX and Mr. Harrison to delete his tweet and publish a retraction and correction of its prior claims with a cease and desist letter. Following this, Mr. Harrison tweeted that we really didn't mean to mislead anyone, and that he didn't suggest that FTX US or any crypto or non-fiat assets benefit from FDIC insurance. FTX CEO and founder Sam Bankman-Fried also tweeted on the matter saying, "Clear communication is really important. Sorry, FTX does not have FDIC insurance, and we never said so on our websites, etc. The banks that FTX works with do have FDIC insurance. We never meant otherwise, and apologize if anyone misinterpreted it." Rival exchange Coinbase Global is being sued in the Georgia courts over an alleged lapse in security. The class action lawsuit accuses the company of causing financial harm to users by locking them out of their accounts permanently or for long periods of time, as well as violating federal laws by listing securities on its trading platform. That follows on from a suit brought against Coinbase in New Jersey, which contends that the company allowed U.S. persons to trade in unregistered securities, something that the SEC is itself investigating. Coinbase stock has dropped by 22.29% over the last week. Bitcoin's credentials as an inflation hedge have been called into question this year as the prices of goods and services rose steeply, whilst Bitcoin racked up significant losses. Now, hedge fund manager Anthony Scaramucci has suggested that Bitcoin can be an inflation hedge if it reaches a sufficient critical mass or wallet bandwidth. The CEO of Skybridge Capital puts that limit at 1 billion Bitcoin wallets compared to an estimated 200 million that are currently in operation. However, he didn't provide a timeline for when that 1 billion wallet figure would be attained. Mr. Scaramucci also said that he remains bullish of Bitcoin and the overall crypto markets, and he pointed to BlackRock's decision to launch a new private spot Bitcoin trust for its institutional customers as a sign of confidence in the sector. Bitcoin sold off by just under 11% last week as investors moved back to a risk-off stance. Ongoing issues with crypto security and the hacking of DeFi protocols and tools mean that salaries are soaring for blockchain and crypto security experts. Crypto recruitment specialists Neil Dundo told Cointelegraph that the rise of DeFi protocols had opened up opportunities in the security auditing space following hacks that are thought to have stolen as much as $2 billion this year alone. Bloomberg reported that security auditors are now regularly earning $400,000 per annum or more, part of an estimated $237 million spent by the DeFi industry on tighter and more effective online security.